Mr. Park, welcome to Uzbekistan.
Thank you very much. It's really a pleasure to be here.
Mr. Park is the chief spokesperson for ADB on economic issues. He leads the economic research in the Regional Cooperation Department, which publishes key knowledge products such as the Asian Development Outlook, Asian Economic Integration Report, Asia Bond Monitor, and the key indicators for Asia and the Pacific. Thank you. Glad to see you in our studio. The top management of ADB is always welcomed guests in our country. And at the beginning of the month, Vice President of the bank, Mr. Chan, visited Samarkand to participate at the second economic forum. And what is the main purpose of your visit to Uzbekistan?
Well, my goal coming here to Uzbekistan is to learn more about the progress of economic reforms. We're living in a very difficult global environment, so I'm curious to see how the economy is doing and what the current policy challenges are. ADB has been a longtime partner in development in Uzbekistan. We try to take a finance plus approach where we not only finance development projects, but we also try to provide knowledge and also bring partnerships to the support that we give the government. And so part of my time here is also to think about what are the knowledge needs of the government to better understand how to address different development challenges. We, every 4 or 5 years, go through an exercise where we develop a partnership strategy document with the government. And so we'll be preparing for a new partnership strategy document in the coming year. And so part of my work here also is to try to better understand what is the diagnostic research work that needs to inform the design of the strategy going forward. I'm also really happy I'm going to have an opportunity to talk to various partners. That's the partnership part of our approach, including think tanks, university. I'm giving a talk at a university, at Westminster University tomorrow, and also going to be part of a meeting with other representatives of international financial institutions.
It's not secret that the region development progress is facing serious challenges such as the adverse impact of the COVID-19 pandemic, global foreign policy tensions, climate changes. The crisis, however, is not always challenges but opportunities as well. So how is the government of Uzbekistan effectively managing with the economic consequences of the pandemic, and how is using the opportunities that have arisen?
Well, all countries in the world have been very challenged by the pandemic, followed by the Russian invasion of Ukraine, which has created big shocks to commodity prices. I think the Uzbekistan government has done a really commendable job in how it's managed the macroeconomy through this very challenging time. Uzbekistan was one of the only countries to post positive growth in 2020, the first year of the pandemic, and had a very robust recovery in 2021. The challenges keep building with inflation and other things, so growth is slowing a bit, but we're forecasting next year for growth to return to about 5%. And so I think that all reflects pretty good management of these issues because the government has been able to do this without raising debt levels to very high, unsustainable levels, although it's still important to move forward with structural reforms to make sure that the government deficits and spending is kind of not putting too much pressure on macroeconomic stability.
Mr. Park, how do you think, how is the global crisis impacting in particular Asian development?
Well, you know, our research department in the Asian Development Bank, which I direct, we spend a lot of time trying to monitor the global economic situation and the situation in all of the countries in the region. And every quarter we kind of update our forecasts for what we think is going to happen going forward. And this year, because of inflation and much more aggressive U.S. Fed tightening than expected, we have been lowering our growth forecasts consistently over the year. But one of the exceptions has actually been Central Asia and Caucasus region, because earlier in the year we thought that the Russian invasion of Ukraine was going to create such a big shock to countries in this region because of the direct trade and investment links to Russia that we really downgraded growth. But it turns out that there have been some hidden blessings of the Russian invasion of Ukraine in terms of creating opportunity in other countries. For instance, in the Caucasus region, we see a lot of financial flows as Russians try to leave Russia, and some come and move and spend money and invest money. Also, there's been a diversion of trade that no longer can go through Russia to go into Central Asia, Caucasus region, and that has created more business for the transport sector. And of course, there are some trade opportunities for countries in Central Asia that are not joining the Western sanctions on Russia because these two parties are sanctioning each other in some sense. There's opportunities potentially to gain more market share, both by sending goods to Russia and by sending goods to Europe, potentially. And we see some of that happening, I think, in Uzbekistan and other countries in the region. Most recently, we are seeing the financial situation in Asia continue to deteriorate, unfortunately. We're seeing more outflows. I really mean just in the last month or two. We see a bit more capital outflows from the region. We see higher risk premiums if you look at the bond yield spreads in Asian countries compared to other places. So I think this reflects just the continued persistence of this inflationary pressure and continued uncertainty of how far the U.S. Fed will need to go to bring inflation in the U.S. under control. Because inflation now has persisted in many Asian countries, we're also seeing some countries see inflation in the core part of the inflation index, which means not just higher energy and food prices, but all prices and wages as these expectations start to get built into the pricing. And that's a real concern, and we've been telling central banks that they have to be very vigilant about core inflation especially, and really be aggressive in keeping that from advancing too far, because otherwise they'll have an inflation problem which is a little bit harder to control and that will persist longer. And so that, of course, creates challenges. The other thing that we're seeing is, Europe is almost certainly in recession. The U.S. growth forecasts are also been downgraded quite a lot, and growth is likely to be very slow in the U.S. And then in China, which is the other huge global economy, we see very slow or very little movement away from the zero COVID policy, which has really suppressed economic activity in China. So you have this external environment where demand is slowing, and Asia is a region that has traditionally relied quite a lot on exports to these other countries. Now, it's been somewhat fortunate that in many Asian countries, because COVID has been pretty well managed without locking down economies, we've seen kind of a robust recovery from the pandemic, greater economic activity, and a recovery in domestic demand and employment. And so that has created some growth momentum that can kind of somewhat offset this declining external demand that we're seeing because of the slowdown in the major economies. But still, it's a very tough environment, and one in which it continues to be quite uncertain because the war continues, the trajectory of inflation and U.S. Fed policy remains quite uncertain. And as we know, this year we've also seen so many climatic shocks, like huge floods in Pakistan and huge droughts in India and other places. So it's still quite a challenging environment. And so I think countries need to be very careful in how they manage their economies going forward. Still, despite all that, Asia is still the most dynamic part of the global economy and contributing much more to global growth than other regions of the world. So we're still bullish, in some sense, on Asia's recovery. Our forecast for developing Asia, excluding China, is still over 5% for next year, which is pretty good in this type of environment. Still many downside risks, but we're hopeful that Asia can still be the leader in keeping growth momentum going globally.
In the post-COVID period, ADB is actively calling for investments on non-conventional sectors of the economy, such as green energy, human capital, and private sector development. However, in the development finance envelope to Uzbekistan, a large share of finance still falls on traditional sectors such as industry, agriculture, and so on. Will priorities for the next partnership cycle be reoriented?
Well, in our current partnership strategy with Uzbekistan, we have focused on private sector development as well as reducing socioeconomic inequalities and also regional economic integration. And this has been in line with government priorities. The government's 2022 to 26 development plan also highlights green development and human capital as areas of priorities. We believe those are very good priorities. These are both hugely important areas to support sustainable economic development over the medium and longer terms. So we're happy to support that. Actually, those priorities are also related very closely to industry and agriculture, if you think about it, because a lot of climate change adaptation is about how agriculture can become more resilient to the challenges of water scarcity that are likely to emerge in Uzbekistan, as in many other countries. And private sector development is really the key, I think, to healthy industrial development in Uzbekistan and reform of state-owned enterprises.
Mr. Park, earlier you mentioned about economic sectors for the next partnership cycle. So can you note another key moments for that purpose?
Yes, well, one thing is that the Asian Development Bank has really now putting a huge emphasis on supporting climate change mitigation and adaptation. And so we're reorienting all of our operations to be climate-oriented, which is a big challenge. In many countries, including Uzbekistan, we're also putting a very high priority in supporting actions to address the climate change challenge. And so we have funded, I think, what will be the largest wind power plant in Central Asia. We are funding solar. We're very active in the renewable space and trying to mobilize private sector money as well to support a shift or a diversification, at least, of energy sourcing away from fossil fuels and towards renewables. And we're also trying to work with many countries to help the governments also develop the capacity in terms of managing these climate action processes, because addressing climate change requires an understanding of the latest technologies and how they can be used. It also requires a strategic vision for the country about identifying what are the real key bottlenecks or areas that need to be addressed as part of a nationwide multi-year strategy to reach net zero or contribute to reaching net zero globally. The Uzbekistan government has made a commitment to reduce its carbon emissions going forward, increase its energy efficiency. And so we're very committed to standing with them and supporting their efforts to realize this ambition.
Professor Park, in the Asian Development Outlook 2022, you noted that the developing Asian governments should remain vigilant about risks such as monetary tightening by the US Federal Reserve and European Central Bank, as well as growth problems in China. Considering these risks, what steps should be taken to curb inflation without hindering growth?
Right, so this is a common challenge that many governments in Asia are facing, trying to support continued economic recovery while addressing high inflation and rising debt levels, which can create macroeconomic instability. And so with the Fed tightening of its interest rates, that kind of naturally creates more financial instability in the region. because it creates an incentive for money to move back to the US and away from emerging markets, including Asia. It also, of course, puts pressure on exchange rates because that flow of funds often leads to currency depreciations. Uzbekistan has seen depreciations occur. It has responded like most countries in Asia now this year. We're seeing a very common response be to, of course, raise interest rates as well. But if you raise interest rates too much or too fast, you could risk choking off the recovery, right? Because you really hurt investment incentives, et cetera. So it's really trying to balance those things. And I think that's what the Uzbek central bank has done. They rose rates all the way up to 17%, keeping an eye on the exchange rate. And when it stabilized, they brought the rate down modestly. The other important thing is with growth globally slowing and interest rates rising, it makes debt much more costly to repay, right? You have less revenue coming in with lower growth, and you have higher interest rates to repay loans. So it's very important that the government be very disciplined in its fiscal spending to avoid accumulating large amounts of debts, which if it gets too high, you can run the risk of investors globally losing confidence that the government will be able to manage these high levels of debt. And so I think the government has had to balance this with trying to protect consumers from the high cost of higher food and energy prices. And so they've postponed some of the reforms to deregulate some of these prices and raise them. I think that makes sense. But as we go forward, that is very costly to the budget. So it's going to be really important for the government to do a better job targeting the vulnerable groups without really subsidizing the price level for everybody, which we know from a lot of experience doesn't often target the poor very well. Often many rich people or corporate entities benefit from government price subsidies. And so it's going to be much better for really helping the poor who need it, and also for debt sustainability if the government can shift more to more targeted efforts to really figure out who needs the support.
In the upcoming period, Uzbekistan's economy is expected to face a very serious challenge. A recession will limit fiscal space for reserve creation. Uzbekistan's finance minister Ishmetov stressed that the only way out is to focus on structural reforms that will reshape our policies, relying on the private sector rather than public money or borrowing. Do you agree with this opinion?
Yes, I think it's been a kind of a crisis period these last few years for everybody, so it's understandable to think a little bit in the short term, but I think now is the time where we have to kind of see through the end of these crises and really address some of the more structural issues that are going to affect medium and long-term development goals. So structural reforms are really important to put the government on a sound financial footing to be able to make the kinds of productive investments that will really raise growth and productivity and also support the goals of greening the economy, et cetera. And so, for instance, restructuring state-owned enterprises, reforming them to put them on better financial footing, introduce more competition, governance reforms, all of that is really important to raise the productivity of the state enterprises and also private enterprises that compete with them, and to put less pressure on the government budget, as well as moving forward with some of the price liberalization reforms. I think those are really important. Many countries struggle with that. So I've done a lot of research in the past on the Chinese economy, where I think experts were telling China that they needed to restructure their state-owned enterprise sector, and the government found that politically difficult. But eventually it became such a huge macroeconomic problem because the unreformed state enterprises in a more market environment, they tend to lose more and more money over time. And at some point, the sector is just hemorrhaging money in a way that really creates huge opportunity costs in terms of lost funds available for investment in the private sector and elsewhere. And so finally, probably a decade too late, China moved forward with very aggressive restructuring of enterprises where they even privatized or sold off a lot of the poorly performing enterprises. Right now, the state-owned enterprises in Uzbekistan haven't reached that level of crisis, but there are definitely many concerns about the efficiency of how they are managed. And it will be much more beneficial to the economy if efforts to improve the incentives and performance of that sector can be done earlier rather than when it becomes very costly to the economy.
Mr. Park, thank you for your answers and for your time. I wish you success and a productive visit to Uzbekistan.
Thank you very much. It's really a pleasure to be here, and I'm looking forward to my visit.
Thank you.